Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market summary for the week ending January 31st, 2014. Let's get a quick summary of where we are for the month on prices. First, starting with corn. March corn up 12 cents. December corn actually unchanged. March wheat down 50 cents for the month. March soybeans down 33. November soybeans down 30 cents, so tougher month on soybeans. The stellar of the month, cattle, front end of the cattle futures up over $7 here in the month of January, and lastly hogs up about 50 cents. Super Bowl weekend coming up, Groundhog's Day, brings to light a lot of talk on weather in both those, Groundhog's Day on Saturday, Super Bowl on Sunday, wondering how an outdoor Super Bowl is going to work in the northern parts of the U.S., but keep in mind logistics here in the States have been tough as far as movement of grains or any products. We've had issues with cold weather and snows affecting trucking. Rail service has been running way behind for the same reason in weather, and also just volume and product moving from other sectors, mainly the energy sector. And then lastly, the cold weather is affecting barge traffic and so on. So logistics continue to be a point of concern here in the United States. And keep in mind there's 3 snow systems potentially coming in the next week. One this weekend, one Tuesday, Wednesday of next week, and then one of the following weekend, and cold weather in between. So looks like we've got another week or so of weather to, another week of winter to live through. Corn continues to be very range-bound, very quiet. Reminds me much of corn markets from 7-8 years ago, prior to the recent market situation. We had the huge rallies in the late 2006 through 2012 or 13 time frame. Very quiet, very choppy, supported by good demand, resistance by a big crop yet to move, and potential of a big crop in the world and one coming here in the States. Interestingly, a note though, in the last couple 3 weeks, ever since the January crop report, we've seen some narrowing of the corn spreads, mainly in the old crop. March-May, is in under 5.5 cents after trading in upwards of 8 cents not too long ago. Same with March, July into around a 10-cent level. A little confusing why it's narrowed in. I think partly what happened is the January report knocked carry-out numbers from a 1.8, 1.9, what the market was looking for, to something a little over 1.6. So not as big of a stocks-to-use ratio. It took some wind out of the sails. But also, we seem to be seeing some export potential picking up. Very good week this week on corn, 78 million bushels. We're starting to see some of the old customers of yesterday, the Japanese, South Koreans, and so on, being fairly aggressive, picking up on some corn purchases. And from a logistical standpoint, as I mentioned, we had logistical issues here in the U.S. getting this huge bean program moved, going overseas. Will that be replaced by a corn program once we go in that transition to South America as far as bean exports are concerned? So let's bear to watch that, but I think corn spreads have come in about as much as they're going to, considering the current environment. Stay tuned with that. Basis levels will be interesting to watch. There's going to be a lot of ebb and flow on that depending on movement. One last note we've been talking about here in the office as far as movement. With this recent huge run-up in propane prices, all of a sudden you hear how there's some wet corn in the country that yet still needs to be dried here 2-3 months after harvest. Brings the point, wet crop, fair amount of FM. Are we going to see some quality issues that create some movement here before planting time? Producers better have a close eye on their inventories, especially on the farm. Soybeans, we're on the verge excuse me, of the biggest harvest in human history in the southern hemisphere coming up. Brazil's has some harvest going on. It's going to eventually pick up pace as we get into here into February and into March. As I mentioned earlier, this export transition from North America to South America, we're in the very early stages of that. So far, Brazil has loaded just a few vessels. Keep in mind, on the books, there are 2.5 to 3 million metric ton to be moved in the month of February. A year ago, they did about 1 million metric ton in February. But logistics in South America obviously a key, and that's going to be interesting to watch, especially with this huge crop. If logistics go okay, they're not going to go great, but if they go okay or better than expected, that's going to take away some more business from the U.S. If logistics are struggling big time, we may see some spillover business remain here in the U.S. And the market's anticipating we see some cancellations or some switches, especially to China coming soon. And keep in mind, South American beans are about $1.10 discount to U.S. beans in the export market right now. Some analysts will say in that $1.10 to $1.20-$1.25 area, it pencils out to import South American beans into the southeast part of the U.S. So I think that's something to watch too as time wears on. So the Super Bowl coming up is plenty cold, but believe it or not, it's less than 60 days to April 1st. So from a producer standpoint, you need to ask the very hard question, with planting time not that far away, how much new crop corn do you have sold? And maybe more importantly, how much old crop corn and or beans do you have sold? It's a time of year where there's a lot of meetings going on. People need to be putting game plans together, talking to some people. And in light of the Super Bowl, what do you have in your playbook? Are you just making cash sales? One thing we would really look at adding to your playbook this year, if you haven't done this in the past, looking at some options to set some floors under the market to use as price protection for your inventory or the upcoming crop. Feel free to give us a call on that. Cattle market still at or near record levels here over the last couple weeks. Numbers continue to be very, very tight, and that's going to looks like be a factor as we go into the springtime. The key thing going forward is how does the consumer respond to the higher priced beef, and what does that do on the demand sector? We don't know the answer to that yet, and that's going to be real key in this cattle market going down the road. Hogs, Tyson Foods came out this morning talking about PEDs, the PED virus maybe having an impact of discounting the hog numbers 2 to 4%. Obviously having some impact on their bottom line, so that story continues to be out there. It's hard to know what the numbers are, but no doubt there's numbers that are down. That's not only going to have impact on potentially upside of hogs, especially in comparison to cattle prices, but also in feed usage. Some are looking, getting back to the corn real quickly, some are looking for an increase in exports on the corn. The argument on the other side, though, is the feed number could be a little too large, especially considering what's going on in the pork and the beef industry. Once again, if you have any questions, feel free to call us here at the office in Cedar Rapids, Iowa. Phone number is 800-373-2525. Catch us on BISCommodities.com or also on Twitter, BIS_commodities. With that, have a great holiday weekend, and we'll talk to you next week.